evening, and happy Monday to everyone. Please give me some okay. You can hear me? Kim, good to see you. How are you? Long time, I think, in the live rooms, right? Kim, or you've been just quiet. Good to see you. Thank you for joining. Hi to everyone, guys. Thank you very much for your messages about the okay. You can hear me. So let's begin. This is Monday session. It's our longest session, weekly plan preparation. So let's start going over all that and cover our instrument. For all those of you who are here for the first time, welcome on board. And this is, as I mentioned before, the Monday session, longest session, because we prepare the full trading week. That's the trading report, the one you get after the live room. Basically, everything that is discussed in the live room is summarized here. Please watch the video if you still did not, that explains how to use the reports. In the comment section, you will find the most important webinars that explains what do we do, how do we do, why do we do. On the very low, you will find a watch list. What you do here is you simply click on any of the charts and it gives you the idea what do we follow and how. Okay. Slightly above in the comments, everything is separated by section: forex, short-term, indices, commodity, CFD, and crypto. Everything is explained here a bit more detailed. It's not a replacement to the live trading room meetings or recordings. It is a summary of the things, how they are done. Okay, so what's bullish for short-term, bearish for long-term, etc., etc. We have all the plans right here. So let's begin. We go over the report, instrument after instrument. Let me just put it here so it doesn't interrupt us. Oops, sorry. So it doesn't interrupt us. And let's cover it. We start with the European pairs. What's going on with the? Oh, here we go. With the European pairs, and we move on accordingly. If you have any question, just drop it down here and I will explain. So the euro dollar, first of all, the weekly cycle, we are bullish for a few weeks now, trading in the idea of this triple double, possibly for very long term to get a second wave up here, but we first of all will have to beat the bottle of this double cycle. Weekly is a double cycle. Last divergence is bullish. Therefore, we require a bullish move. Bullish move has to be on a daily chart. That could be any corrective cycle, two waves, or a range, or both. Sometimes it's falling into the category of both. But the main thing is that the weekly double cycle should bring us towards 38.2 of the Fibonacci retrace, right? That's the weekly cycle, and that's the place. That's where very likely the euro dollar is heading. Could that go slightly higher than 50%? The answer is yes, definitely. If this is the big special cycle, then this is the deeper correction. After that, we will have to see and read where the wind will blow. But meanwhile, the plan is still, according to the weekly, is bullish. Now, the daily has this first wave, and now developing the second, right? On Friday, it created some kind of a double top with a bounce. It is Friday, and what's suspicious about that it might be easily just a position cash out. So traders close the position before the weekend just to renew their profits during the beginning of the week and try to push that further. The way it looks, as we said, from the weekly, daily must be corrective cycle, therefore two waves or any kind of range. Whatever the plan is, the preferences are still buy dips. Dropping lower to try to recognize each of the daily legs, Right? This was the leg number 1, and currently it's building the leg number 2. So dropping to lower time frame, trying to recognize each of the legs, we figure out that the first leg is a triple cycle, then double wave correction, and now the pair is developing a possible triple cycle by itself. That means once we approach to the same area we talked about before, right here, we should start looking for the cell setups. The best would be if we get there, create a divergence, daily and 4-hour, which is already starts to appear, and then we start looking for the cell reversals. How? The best and the most conservative thing, of course, would be the daily trend line. Once it's broken, that's the possibilities that starts to be open in front of our eyes. But more aggressive would be if the daily completes the wave and 4-hour is a cycle by itself on each of the legs as we just showed, then watch for the trend line on the 4-hour and go short more aggressively. As long as none of these scenarios happened, our pressure, at least for now, the beginning of the week, was and remains still bullish. Okay, and the expectations are still slightly higher. Next one on the list is the euro versus the pound, the pair that we are bearish on right now. We also got, well, it happened right on the previous week. We got the convergence. The best scenario would be the break of the trend line with the convergence, and the 4-hour chart is developing for us a triple cycle. 2, 3. So we can definitely start expecting for short-term corrective cycle. Corrective cycle could be 2 waves up or a range. Once that's completed, we are back to sell. Our plan for the long term is sell the rallies. Our cycle begins from the weekly. This is our cycle. We got wave number 1. We are expecting wave number 2. Daily was the triple double in that format here. So if we manage to break here of the trend line, sorry for my ugly drawing, we are basically in the direction of the second wave creation. That's why our plan is sell the rallies for the long term. Can we trade buys on the short term? The answer is of course yes, but we will need to match the short term cycles for that. So let's draw here the levels. This is the first leg of the cycle. This is the second leg of the cycle. And that's the most important levels to pay attention to. 1, below this spike. 2 is slightly lower, around the area of 0.88. From there, we would expect the short-term correction to begin. Is it smart to trade here short-term buys? Well, from these zones mentioned, if we get a setup, we can go aggressive short-term buys. Why aggressive? Because remember, we are still against the weekly and the daily. We do want to see the corrections, definitely. We do want to see the runs, definitely, so we can go and sell them for the longer run. But because we trade against the higher time frames, we need always to be smarter and more conservative, right? Meaning trade like with aggressive approach, meaning in simple words, smaller risk, right? Conservative in our decisions, aggressive in our setups, meaning smaller risks. That's the whole idea here. Next one on the list is the euro versus the yen. Now this pair has no cycle. It starts from the monthly, which has nothing clear. It goes with the weekly, which has nothing clear. And from my point of view, it has simply no cycles. There is a possibility that the euro yen is building some kind of triple double here, or a possible further continuation. I wouldn't really put all my money on that. Daily also doesn't fit inside that too much. So the way I see that, weekly has no cycle. Daily is building up a possible double cycle to the upside, which means once this rally is complete, we can look for short-term sells. And that's how I would look to deal with that, to be honest. So where are these levels we're talking about? Let's put the Fibonacci's there. 61.8 is approaching right now. 100 is slightly higher. What's wrong with the connection of the MetaTrader suddenly dropping? One of these levels should be the area where we might experience the short-term sells. Since weekly and daily have no cycles, our alternative is working with divergences. The last divergence to be developed in triple time frame confirmation. So weekly with daily and 4 hour, or daily with 4 hour and 1 hour, or even 4 hour, 1 hour, 50 minutes, right? According to the trio we use, that's the time frame, that's the length of the trade we can expect. So the daily develops a possible bearish divergence. 4 hour fits inside and develops divergence by itself, right? Each of the cycles seem to be mini leg by itself here on this on the go to the upside. It's one special here, correction, and now it's building up some kind of 1, 2, 3, right? And this would be the first place to start looking for the potential reversal. The next place is, if this one is broken, would be slightly higher. That's where we'll be looking for short-term sells. Now, daily and 4 hours starts to develop the same. 1 hour will have to fit in, meaning if we can get 1 hour for us doing that, right? That would be the triple time frame confirmation to start looking for the pullbacks. Remember, triple time frame confirmation, then we have the okay to go. What will be the best setup? False breaks, bearish divergence in all the time frame, trend line breakout, the last relevant trend line on the time frame you will trade, breakout, all that would give us the okay to go with. Euro versus the Aussie is the next pair of the European. The long term is still bullish for us for one reason. The 100% cycle that was in play broken, vanished. Possibly we are heading towards the 61.8 expansion of this cycle. The second leg, 61.8, falls exactly, sorry, the 100 of the multiplication falls exactly there. 61.8 is here. And this is the place where I think we are heading, at least very likely even slightly higher. So the weekly still has the room to go according to the cycles. It will not change any of the monthly big range, because it's still inside the same category, right? Even if it spikes here. And that's the direction we are looking to trade. Daily has for us this double wave, some bearish divergence. Sorry for the ugly drawing, meaning that 4 hours should be corrective cycle. Corrective cycle could be 2 waves or a range. So 4 hours could make any of this, or any of this. Both scenarios definitely possible, and don't change nothing from the longer time frame. The longer time frame view is still bullish. Short term is acceptable to trade the corrections for 2 waves on the 4 hour chart or inside the range. The safer trade inside that is get the dips, go for buys, expecting the new high. Okay, so far so good. So the Euro Aussie long term bullish for us. Short term it can make the retraces, definitely, because we expect a corrective cycle right now that could be 2 waves down or a range. If it's a range, we might have one false break, one more false break for that to make this to happen. Okay, that's the bottom line. Euro versus the New Zealandian, the same idea exactly, weekly and monthly. Well, according to monthly, we have a lot of room to go towards the 50%. That's too far. We will start even with 38.2, which is around 184. Watching on the weekly cycle, we got triple double. 1, 2, 3, 1, 2, breakout. That happened. This is the place we are heading towards, which means buy the drops. Now, the daily has a double cycle with bearish divergence, meaning corrective cycle is acceptable. What kind of corrective cycle can we have on the 4-hour chart? 2 waves or a range. Currently, that looks like 2 waves with a bullish divergence. So Euro Kiwi was and remains bullish. Okay? Bottom line, buy the dips. Bullish setups, once they form, we have the confirmation from the higher time frame to start looking for the buys. Can that become a bit deeper to waves? The answer is yes, it could. Will that change the longer term plan? No, it won't. The levels from the higher time frames were and still are suggesting the bullish plan. Next one of the euros is the euro versus the Canadian. Here we are. So let's just remove that. Okay, according to the very long-term cycle, we are bearish. We are here in the triple. We expect 1, 2. We are also here inside kind of a long-term range. Closer to the top of it, we will be looking for sells. But that's for the very, 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 very long term. Weekly, the last divergence of the weekly is bullish. 2 waves and bullish divergence, meaning we expect a retrace. If the weekly divergence is bullish, daily must be corrective cycle, 2 waves or a range. So daily could make 1 and 2, or daily could make anything like that, right? Before the next sell takes place. Now, in order to be able to decide if the daily is now in first leg or not, we need to check this leg, the first leg on the 4-hour chart, and see how it developed. The 4-hour chart suggests here triple cycle, 1, 2, 3, which followed by double wave correction and a trendline breakout. The bottom line, as long as this is our invalidation for the short term, triple double became in play, and as long as that scenario holds, the euro CAD is bullish. We would expect the second leg of the daily to start and be developed now, meaning we are possibly heading towards 154 area. All that is relevant, of course, as long as the last low holds. The 154 falls in exactly of the weekly correction. That was the weekly double wave. 50% of it falls inside the same area. If we manage to get this zone, this should become the sell for the longer run. Meanwhile, for the short view, and as long as the last low on the 4-hour holds, the pair is still bullish on the short term. Okay, that's for the euro versus the CAD. And the last European pair we have on our list, euro versus the franc. On the euro franc, the plan was and remains bullish. That is the double cycle we have. 1, 2, each of the legs suggests as break level. So the euro franc, it's a bullish cycle. Sorry, it's a bearish cycle with bullish ending. Bullish divergence is in play, and the 4-hour chart created for us a convergence, false break and convergence, meaning we are after buys. Now, could that make attempt for one more low here to clear any stop loss before the rally? The answer is yes. It does not change the direction and the plan here, because we require, after the convergence, a correction. Correction could be 2 waves or even bullish hidden divergence. Whatever comes, comes. And that could be even 1, 2, with one more low to be created. It does not change any of the plan, any of the views. Buy dips is still the plan here, even if that makes a new low. So Euro franc, bullish setups. The lower we can get it, the better the chances for that to work. Target would be, first of all, 38.2 correction of the last leg of the daily, which means 113.80, and then the big view, which means around 115. That's all for the euros. Any questions, guys? So from my point of view, the clearer pairs here are the crosses, the euro versus the commodity pairs, like the euro kiwi, euro aussie, euro cad. The commodities ones, they look clearer. At least that's for now, yeah? For the beginning of the week, we will see how the week develops, of course. All right, next one, the pound. You are very welcome, Talal. Nice to meet you. I think this is the first time I see you here, right? Nice to meet you. Is it Talal or is it Mansoor? Which one is the name? Okay, so the next pairs of the list, pounds. Pound dollar is our first one. Okay, so it's Talal. Thank you, Talal. Thank you to Talal. So the pound dollar, due to the weekly divergence, we require daily 2 waves correction. Daily created for us this first cycle, which we had doubts about on the previous week, the way it developed. But after the breakout of the mini range and the last high, this is the way it is developing. So daily should be a corrective cycle. Corrective cycle could be 2 waves or a range. Correct? So this is what the pound suggests us. First leg, second leg, that's for the daily. Now let's put the cycles here to find the levels. So we are right now around the 100 level. The next level, if this is cleaned, would be only 134. Honestly and personally, I have the feeling that it's going higher a bit here for one reason, and I will explain that the daily is not yet, and that might turn to be bearish still, just not yet a bearish divergence. It's just a potential because the slope is still going up. And that's why I suspect that might try to take us forward towards 134. If this will become divergence, then of course we are finishing with the buys. But meanwhile, the plan on the short term was and remains bullish as long as the day does not become a bearish divergence and as long as the trend line is not broken. This is our invalidation. On the 4-hour chart, short-term view, we start to see some kind of bearish pressure, meaning we might face some kind of pullbacks, which later, as long as the trend line holds, might turn to be the rally towards 134. So for the pound dollar, at least as for now, for the beginning of the week, I would remain exactly like in the previous week, bullish. 4 hours starts to show bearish divergence. 1 hour does not have nothing. Therefore, they need to fit together, right? Before they start to make some kind of correction. They don't at this stage. So the plan was, as I said before, from my point of view, still remains by the dips. Dips could happen. They are welcome to happen. which we want to go and buy them. Okay. I have two questions here. Talal, 4 hour, there is what pattern? Which pattern? What pattern? And Ahmad, you are asking about EuroCAD. Which one? This one? Oh, this trend line, you mean the false break? Right here, yeah? Yeah, that's a bearish hidden divergence versus the daily and the weekly, meaning we require here a corrective cycle. Corrective cycle here could be 2 waves or any bullish stoppage before. So the EuroCAD could have make one more low for divergence and buys, but it never did so. So the buys basically continue for you right here. Bullish hidden divergence, trendline breakout, and you are back to the buys. That was the first option, to see one more low and get for false break and buy. And second option is when you get the reversal here. If the 4 hour, very simple step, 4 hour last divergence is bearish hidden, right? 1 hour should be corrective cycle. 1 hour means 2 waves or a range. It got you 2 waves and a range. 2 waves correction, sorry. Trendline breakout. Back to bullish. Okay? Good. Talal, which pattern? I don't see any pattern. What pattern do you mean? I don't see any currency pattern. The pound for me was and remains still in the corrective mode based on the daily 2 waves that should be completed. Where they will be completed, we can't say. We are around the 100 right now. That's definitely an option. I suspect we are going towards 134 for one reason. It will fit also in the weekly 38 too. So that's the place. That's why I suspect that to take us slightly still higher on the short view. And that's why the plan, as long as we hold above the trend line by the drops, that's the view. And the drops could make a little correction down. That basically, sorry, the sells could create and cause the little correction down once 4 hour and 1 hour combined together. Bearish signs. 1 hour currently have nothing. Has nothing. Next pound on the list is the pound versus the franc. We are in 2 waves down here. That comes after triple double. It's a bullish hidden divergence, expecting further continuation. Daily, each of the legs from the weekly is a cycle by itself. Special. 4 hour, daily also provided the false breaks, yeah? 4 hour gave us the convergence. Sorry, here. The convergence became in place from all the highs. Even this high is broken. So we're completely in a bullish mode right now. Pound franc bullish. Invalidation is last low. Okay, so pound franc is bullish for us, looking for buy setups. Next one, pound versus the yen. Now, pound yen has no cycles. As per divergences, pound yen last divergence on the weekly was bullish. Daily never got a bullish divergence to support it. So that means if the last divergence from the weekly is bullish, daily should be corrective cycle before the sells. Currently it's developing two waves, right? And sorry, my nose is itchy. And we are here to find that two waves levels. So the first important level is right here, that's around the 148. The next possible level, 152. Sounds too deep as for now. I think the 148 is going to create a lot of problems on the rally, at least for the short term. The closer we get to the 148, the stronger the pressure would become bearish, and I suspect this is where we will start watching for the sells. 4 hour is making this cycle, approaching towards the 148. 1 hour will have to fit in, meaning make something like that. If it does, that will be our sell plan. Meanwhile, for the short term, pound yen is still bullish, carrying on from the previous week. Okay, short term here, because we have no cycles, we rely on the movements from divergence to divergence. Just to answer two questions, Mayova, pound franc targets. Pound franc targets should be based on the first leg, which is the last one, right? So between 38 to 50, once you get the bearish divergence, and the reason for the between is because it's a special cycle. So 38 to 50, once you start to get bearish divergence. Next bigger target is around 130 based on the weekly. And for the invest, there is a very good chance, still too early to judge, but there is a very good chance that we are now in the beginning of some bright future here. Too early to make any kind of decisions of that, of course, and it's anyway for like, I don't know, 5 to 10 years. So short view, we have the first leg targets, and then we have the big target here. Ivan, would a break of the trendline range be set for buy for pound franc? Yes, definitely. Definitely. You are currently stuck inside a range, holding the bottom. Ideal scenario would be if you get clearer two waves, like one move, range, second move, and a breakout. But in that case, most of the times it doesn't become ideal. You just make a move. And that's why the invalidation is probably the most important thing here. The invalidation is this. Invalidation for the bullish plan. All right, continuing forward, the next pound pair is pound versus the Canadian. Pound Canadian, pound Canadian, pound Canadian, here. And the pound CAD, basically it's simple. We have two waves from the weekly, bullish divergence, and daily, each of the legs is a cycle by itself, meaning we are going at least to 38.2, possibly towards 50%. 50% becomes valid target in a double cycle when we are dealing with a classical. Classical means each of the legs is the same cycle. That's where the 50% becomes as a target, possible target. So pound CAD was and remains bullish. The last setup we got was the bullish hidden divergence on a 4-hour chart, and since then it is going and going and going. There is nothing seems to be able to stop that. Every retrace with bullish setup still considered to be a buy. Pound Canadian is bullish. We are heading towards this Fibonacci retraces level, 38 up to 50. Next one, pound versus the Aussie. Another bullish pair. We are, here we go, let me just drop that. We are here building up very likely the second leg. That was the first with double wave correction. That's a cycle by itself here. double wave correction, likely heading towards 61.8. That brings us towards 190. Also possible false break above the top. Daily has nothing against. Free run, no bearish divergence formed. Therefore, pound Aussie is bullish. Was and remains bullish. We expect new highs. The way it looks right now to me, this is what's happening. One special cycle forming. Approximately the area of 184, 185 should cause some fights, bring us in two waves correction or some kind of a range here before the long-term continuation. And the reason for that is the last daily leg as it develops. The 261.8 is exactly here, and that's where I believe the fight should start, somewhere around the 184, maybe slightly lower, maybe slightly higher. So it is yet bullish, and I believe this area would be the beginning of the correction. Correction would be in two waves or a range. That should happen somewhere during the coming period. Let's check on the crystal ball for the classical days, and you can see 21, 26, a very, very, very critical time. And if it doesn't manage to hold this, then the first 3 days of next month, which is kind of funny to think about it, but it's just two waves from now, and that can easily slowly approach it, dance around it, and make the move. So short term is bullish, yet long term is bullish as well. Pound Aussie is still for buys. Pound versus the Kiwi, same scenario. Weekly is bullish, building up triple range and second leg. Let me just try to clarify what I mean here. This is the first leg, and it's a triple cycle. 1, 2, 3. This is the corrective leg, and this is the range. Broke, heading forward, most likely towards 2.08, 2.10. So from my point of view, it was and remains bullish. Daily has nothing against. We are heading towards. The current development of the leg also suggests 161.8 slightly higher. Bullish it was, bullish it remains. Currently, last divergence on the 4-hour is bullish, bullish hidden. The pair is under a bullish run. Okay. Where to pay attention to the possible fight zone? Exactly like I just showed on the daily. This is the leg. It brings it towards around 202, right here, slightly higher. The 4-hour chart leg suggests the same zone. So very likely we're slowly heading towards this area, where from we would be looking for short-term retraces. Checking on the statistics of the crystal ball. Michael, this is part of the Forex crystal ball. Pound versus the Kiwi. Let's arrange the dates also. That's the critical period. So that's for the pounds. Any question about any of them? Did I forget any of the pounds? No, right? It's all covered. My personal list for the pounds is pretty much the same like with the euros. The commodity crosses, Aussie, Kiwi, CAD look the best. I love a lot the euro pound the way it's structured. I love a lot the pound franc. I like a bit less the pound versus the dollar and the pound versus the yen. A bit less. For some reason, traders still look to trade these two. I don't know why, really. I have no idea why. It's kind of a human thing, you know, when it's not clear, we try to make it clear. Not sure why. I prefer to focus on the ones that look much clearer. Any questions about the pounds, guys, before we move on? No? Okay. That means I scared you fairly, right? Good. Now let's continue forward. The next pairs on our list. Talal, you're welcome, but thanks, sir, doesn't mean a question. You said question, thanks, sir. All right, you're welcome. All right, let's continue, guys. The next one on the list would be the dollar pairs. Dollar yen. How many of you looking to trade this pair? Honestly, I saw so many questions about dollar yen. I wonder why. We have no cycles from the weekly. No cycles from the monthly. Nothing is currently in play. Not developing, not ending. Both not clear. So we are looking for last divergences. Last divergence on the weekly is still bearish. Last divergence on the daily is bullish. Already in disagreements with the weekly, right? Last divergence on the 4-hour is bearish. Complete salad. I'll make it simple, guys. Dollar yen has nothing clear. Nothing clear. I think, personally, it's kind of a waste of time to stick to that. I might be wrong. That's just my view, of course. But there is a reason why it looks like that for so long. Well, yes, it's a big range, of course. And yes, it's tradable. And one can come and say, but there are so many pips inside it. 100% true. But from my point of view, most of the times, something like that happens. That's a clear say from the market that there is no money flow on that specific pair currently, on that specific time currently. There is nothing happening. No money flow. Leave it. Why to fight it? And I personally see nothing clear here. My view, it's completely acceptable for short-term trading in both directions. And the way to match in the direction to trade is to match 3 time frames, trio of the divergences. They have to be in the same direction. So if daily is bullish and 4-hour is bearish, we don't have disagreement. So the only way to trade it is if a 4-hour is bearish and 1 hour would be bearish, and then 15 minutes have to be bearish, bearish as well. Then and only then you can scalp that through. So for example, just for example, when the 4-hour is bearish, right? This becomes your top. 1 hour has to be bearish as well. And then 15 minutes would have to be bearish as well. That means like bearish hidden, for example. Let's see if we have in, this kind of a thing. That's the only possible things to trade. Do you really want to fight anything like that? And then you will need to manage that and make sure that once you get a divergence against you, you cash out. Now look for that fight. Would you spend a day waiting for that to happen? Cash out 10, 15, 20, 30 pips just to say, oh, I managed to nail that. I managed to make it happen. It's a waste of time, guys. And even if this one will work as per your plan, most of the others will not. And the reason I show you that is because for traders, one of the most important things to do is to and I hope I pronounce it correctly in English, prioritize the instruments list. When you cannot make it clear immediately up with different time frames, this is a pair you would not want to waste your time by observing it. You want to go with the ones that catch your eye immediately with agreements between few time frames. That's where you will want to stick. The ones that can't offer that would waste your time, would confuse your mind, because they will zigzag back and forth, back and forth, back and forth, make you wonder why the heck it's not moving. And the answer is because there is no clear read in terms of money flow. So dollar yen, completely acceptable for both directions. Next one on the list is the dollar versus the Canadian. According to the long term, my personal view remains bullish. I still suspect we are going into triple double here. I might be wrong, but I think we are heading higher. The last divergence on the weekly is still bearish here, but it's slowly developing a bullish hidden divergence. Not there yet, developing. Daily has to fit in, and the last thing the daily has is a false break on the bottom, false break on the top. How can that fit? It makes it to be 1, 2, 3. That means this is the first leg possibly. The range makes it a corrective leg, and there is a very good chance we are into one more push down. That should stop with some kind of bullish divergence and turn around for buy continuation. So at this stage for long term, it's not ready to trade. For short term, we are inside the range. And the way it looks right now, preferably, it's sell the rallies. Of course, inside the range, both directions are tradable, but preferably, it is sell the rallies. The best way to trade in such cases is again to match 3 shorter time frames divergences. Once you manage to match that, you have the okay to trade short term. If you cannot match that, leave that pair, move to something clearer. And there is a reason why the dollar pairs, almost all of them, are very tricky. Dollar yen, dollar CAD, dollar franc, they all are very, very, very tricky without a clear picture from a money flow. Direct dollar exposure. There is nothing clear there. Dollar yen, dollar franc are two pairs that are considered to be a safe haven. Traders and investors run to the franc, run to the yen when there is lack of stability or where there are too many doubts about the economy. That's not the case yet. That's why there is no clear money flow there. So dollar CAD, the bottom line. We're still in a short-term trading inside the range. Both directions are acceptable. My preference is personally sell the rallies, at least as for now. Dollar franc, here. Previous week was the idea of a possible range. So we wanted to see a false break and then apply the buys. Doesn't happen. So that brings the question again, what's next? As per cycles, there is nothing. We have a false break on the bottom, false break on the top that could turn to be a range by itself. Nothing clear. Last divergence, also nothing clear inside this place. Daily developing another low for a bullish divergence. And deeper cycle. So we take a look on this cycle on the development. We can see that 161.8 is currently in play. There is a good chance it will be respected. There is a good chance it will head towards 261.8, and the bottom of the weekly range. 4 hour has no false break and higher highs currently. It tried to make these false break and make the higher high, failed, never made a higher high. Right? It tried to make a false break here, never made the higher high. It might try again, but it's early to make a decision. Dollar franc is another dollar pair that has nothing clear. The current pressure is bearish. I myself, honestly, don't see any reason to trade that, and I think it can easily turn around at any moment and start a reversal, or at least start to make some crazy moves here and drive traders crazy. I totally agree with you, Kim. That's what we call Trump charts. Well said. Nothing clear. So dollar franc is yet bearish, but with this divergence and the level, could easily turn around. I would be very careful. And the best way to summarize that, at least for now, the beginning of the week, all the dollar pairs, the direct dollar pairs, dollar yen, dollar CAD, dollar franc, they are not clear. The way I see that, the money lies in the commodities pairs. And most likely that's the case because of the tariffs that Trump throw on everyone he just think about. The first to be affected, of course, the commodities, and the commodities pairs accordingly. That's why the money is currently there. All right, so that's for the dollar pairs. Pacifics, Aussie versus the dollar. Even though for long term I am bearish on them, for the short term I am bullish. Aussie dollar is also suggesting these two waves with bullish divergence. Let me just mark it for you so you can clearer see. This is the first. This is the second. Daily, each of these weekly legs is a cycle by itself. Triple, triple. Last divergence on a daily becomes bullish as well. 4 hour chart made a breakout of the trend line, creating the higher highs. No clear convergence there, so it's the principle of the convergence. Bottom line, Aussie dollar, as long as this area holds, is bullish. Last divergence on the 4 hour chart is bullish hidden, meaning the pair is under short-term bullish pressure. Aussie dollar short-term is bullish. Next one, Aussie versus the franc. My personal view remains bearish here for one reason. Daily has no valid divergence, no two candles rule on the first low here, so we can't call that a divergence. So we are after sell the rallies. Aussie franc short term remains bearish. Sell the rallies, expecting a new low. Can that possibly make something like that? Definitely yes. It doesn't change the plan. Sell the rallies is still the plan. Aussie franc is bearish. Aussie versus the Kiwi. Long term is bullish. Sorry, but we're stuck in a range. That brings us therefore the possibility of triple cycle down, range as a correction, possible push lower. This is a very possible scenario. In order to make that valid bullish pressure, I want to see a clear break of the trend line and break out of the range. Once it managed to do so, buy retraces. Meanwhile, for the short-term Aussie versus the Kiwi remains totally acceptable for both directions. Nothing yet clear in terms of daily and weekly combo. We are looking for the long-term buys. We just need the setup to form. Aussie versus the yen. So according to the weekly, which we were bearish for a long time now, it's time to switch. The reason for that is that the weekly completed two waves with a bullish divergence. Bullish engulfing is in play as well. Bullish engulfing is in play as well. Daily cycle is bullish as well. And the last part is the 4-hour chart, creating for us the principle of the convergence, higher highs in play. Aussie yen is short-term bullish as long as we hold the invalidation area. Okay, so looking for buy retraces. Invalidation is very important here because break below that could start the weekly pushing further towards the 100, and that's a lot lower. Why short term, Roberto? 100% correct. That's not short term. Weekly is bullish, daily is bullish. It's just me confused. That. Sorry. Just confusion of the words. Talking too much since 6 a.m. Thank you for mentioning, Roberto. Aussie yen is bullish, bottom line, not short term. It's my bet. Next one on the list, Aussie versus the Canadian. Also bullish setup here. Bottom of the weekly range. False break, bottom of the range. Daily is a cycle leading towards the bottom of the range. And the 4-hour is a cycle by itself on the last leg. Now two candles in a classical play here, though, and that makes it a bit more aggressive. As long as the last low holds, Aussie CAD is bullish. Now here, that might be a short term, and the reason for that is because inside the weekly range, there is no weekly divergence anywhere. So we might get that scenario. Monthly also suggests possibility. I know it looks crazy far away for now, but this is still a possibility. And that's why for Aussie versus the CAD, once we get the two waves correction, I would like, so for example, 1, 2, order range, then and only then it would be sell. Roberto, 4-hour isn't bearish hidden on the, of course it is, but the last divergence on daily is bullish. So your 4-hour bearish hidden becomes just a short-term correction, meaning 1 hour to be two waves correction or a range. That's all. And 1 hour is two waves. So Aussie versus the CAD is bullish, aggressive, small risk, short term. And validation right here. At the moment that the daily would become bearish hidden, I would personally start looking for the sells. It's pretty early. That's why short term it's still bullish. And that's all for the Aussies, right? Aussie yen cover, Aussie CAD cover. Yeah. New Zealandian dollar, like the Australian dollar, from my point of view, we are developing second leg of the monthly. So for long run, I would be looking for sales. But on the short term view, we have here, and again, short term doesn't mean short. Two waves on the weekly. Personally, I have one problem with this situation, and This is why. The 100% level which we have on the big two cycles becomes irrelevant because the first leg is much shorter than the second leg. That's not good. That's why I think this is what's about to happen. Last divergence on the weekly is bullish. Last cycle and divergence on the daily is bullish. New Zealand dollar is, as for now, buy. Invalidation, last low. Requirements, corrective cycle. We must have two waves or a range before we can talk about any possible further sells. So as for now, New Zealand dollar was on the previous week and remains now bullish. We expect corrective cycle, two waves or a range. And it's better, of course, to be on daily because the weekly is the one that has the bullish divergence. Okay, so the short term, we accept we accept the rallies on a daily. We will want to go and sell because of the monthly and the fact that the weekly does not fit inside this cycle. And I suspect that within a few weeks after the correction happens, we are going to continue further towards 0.62. And by the way, this level will fit in pretty much with the monthly two waves. Okay, so we are after buys as for now. Once the daily completes a corrective cycle, this becomes bearish. Again, New Zealand and Canadian short-term buys. The reason for the short-term buys is because the monthly is a bearish cycle, triple cycle. So we are going to here. But the weekly is a double cycle, developing a bullish divergence on the moving averages. And the daily fits in with a corrective cycle by itself, triple cycle, forming a possible false break, bullish divergence developing as well. Time for a possible correction. New Zealand and CAD is under bullish pressure on the short view. What should happen here? Corrective cycle. Could we see a new low first of all? The answer is yes. It will not change the plan. It will just bring new levels for the reversals. That's why the bottom line here, New Zealand CAD looking for buy setups, even if we get new low, and new low is acceptable because for now we're still stuck inside the two candles. We might see another low. Yes, it would be the best setup, definitely. Will we get it? Only time will tell. We don't have false break, we don't have convergence, we don't have trend line breakouts yet, and that's what makes it definitely a possible scenario. Short term, definitely a possible scenario for one more low. But the safer thing here now is looking for drops and buy setups. It has stronger pressure because of the way that the daily and weekly starts to look. And personally, I don't think it's worth it. Your risk reward in such setup would most likely be tricky or small. In other words, I don't think it's worth to fight it. That's why I again will say, from my point of view, drops and lows are for buys. New Zealand franc. This is the next pair. According to the cycles, we have the level lower, not too far away. No divergence on the weekly, so it's still bearish. Daily suggested cycle here. 1, 2. Each of the legs is a cycle by itself. We got a divergence developing on the last part. So 4 hour could be corrective cycle. 4 hour is 2 waves here. Call it triangle, whatever you prefer. Broken, the pair is under bearish pressure again. So we do expect new lows to be created, and the level for the sells is here. New Zealand franc, bearish, sell the rallies. The short-term corrections we accepted on the previous week basically created the 2 waves. It was very small and ugly, but they created what was expected from them. So New Zealand franc is back to bearish. And the last New Zealandian pair is the New Zealandian versus the yen. The weekly with bullish divergence on the bottom of the big range. Daily is a double cycle with a bullish divergence. 4 hour making the principle of higher highs, the convergence, and that brings it to be bullish by retraces. Invalidation for the New Zealand yen is the last low. The pair is bullish, turned bullish. That's all for the New Zealandians. Next one's CAD crosses, CAD versus the yen. For me personally, currently has no clear cycle. It's really sitting here inside something totally unclear. And here we got 1 falls back on the low, 2 falls back on the top. It makes it even smaller range inside the big range. Nothing clear from my point of view for CAD yen. So the pair is totally acceptable for short-term trading both. And once again, we'll just remind you guys, how do we deal with short-term trading once 3 time frames will fit in the same direction of the divergence. Okay, so when 3 time frames will be bearish divergence, we're looking for sell. 3 time frames bullish divergence, we are looking for buys. That could be any of the 3 time frames, daily 4 hour and 1 hour, or 4 hour, 1 hour and 15 minutes. But 3 of them must be in same direction. Okay, and the CAD versus the franc, a very confusing pair, but from my point of view, short term is still possibly creating new low. For long term, of course, we're after buys. This triple cycle, looking for that to fly. Weekly has no bullish divergence currently in play. Last is bearish. Ugly, but bearish. Daily has these 2 cycles with bullish divergence, meaning 4 hour must confirm here a cycle as well, and 4 hour doesn't. 4 hour was 1 straight leg, yes, with divergence, not with a valid one, because on none of the moves down there was no 2 candles in play. Therefore, CAD franc still, I suspect that to try and make 1 more low and bring it to 100. So this is the 100. Let's just put it back on the levels here. So I would expect that to make this low, which after I do expect the game to finish here and to start the fly. So CAD franc, we would be looking for buy setups for the long term. Short term, we still accept drops to get clearer combo of the cycles. Once we do, we are back to buy. Let me just check my list. Yep, that's all from the Forex view. Commodities. Gold. Stuck inside the range, but the plan does not change. This is the invalidation. As long as it is below, I still remain bearish in my view. The reason for that is that the last divergence was bullish on a daily. 4-hour had to be corrective cycle, and it was. 2 waves. Trendline was broken to the downside. The last divergence from the daily is bearish hidden. As long as the last stop holds, the pressure is bearish. Only if it will break this top, we would accept a deeper correction, like with the pound dollar, before the sell. Weekly has nothing bullish in terms of divergences or cycles. Nothing. And that's why the pressure still remains bearish. So gold, from my point of view, sell the rally. Same with the silver. Even though it has a divergence developing, nowhere we get 2 candles in play. So every rally, I still believe we are going further down. Weekly has no bullish divergence in play. So rallies still to be sold on both of them from my point of view. Oil. This is our oil. Not doing much on the last pretty long period. Still stuck inside this not clear picture. And the weekly suggests anything in possibilities. 161.8, which is higher, right here. You can put the Fibonacci here for you guys. Okay. Last divergence is bullish hidden. Daily stuck inside the range with last divergence bearish. So we have totally complete salad for the long term, nothing clear. Oil could be easily traded on the short term for both directions. How do we trade for short term direction? When we can match 3 time frames in the same divergence. Last divergence is bearish on a daily, last divergence on the 4-hour is bullish, hidden. Last divergence on the 1-hour, well, that's 2 candles we stuck inside, nothing clear. You name it. You see? Is that worse to trade right now with the oil? The answer is 100% no. Both directions are totally acceptable on the short view. For long term, we would be looking when the weekly will match with the daily again, and that's not the case. Where is that? Natural gas, still bullish for the long term, of course. On the short view, we got another push to the downside, attempt to create another bullish divergence. 4-hour chart will show that clearer. 4-hour chart currently doesn't have the divergence to support the daily development, so that would be the best case if it can make 2 waves here. And start looking for the buys from there. If that doesn't happen and the daily divergence takes the control, this is the daily lows, right? Then the break of this trend line would be the place to make it start looking for the buy retraces. But the plan was and remains looking for the buys. We still run an investment position there a long time now, several months, from 260, partial cash out here. Now we are holding the final position. Indices, German DAX, we are after sales. Last divergence is daily. We require 2 corrective waves on the 4-hour. We got 1. We would expect a second, and then we are back to sells. Nasdaq starts to be interesting again. We got the 2 waves, and we get the attempt to make the breakout aggressively. Nasdaq is back to bearish with this invalidation. Why aggressively? Because according to the daily, we never got any lower lows in play yet. So aggressive and shorter term, sells on Nasdaq are back in play with these two waves broken. As per stocks, we have one currently running. This is the Deutsche Bank. The plan here unchanged, was and remains bullish. Facebook, we are done with previous week because of the daily divergence. So we finished with our sells in the Facebook. And as per cryptos, Ethereum versus the Bitcoin, finally making the attempt for a breakout here, starting to look like a possible bullish setup. This would be the invalidation. That becomes like a possible bullish hidden divergence, which would be looking for buys here. The way the daily cycles look, the daily levels look, if the last low is broken, this is the invalidation, then we are heading towards a new low, completely new low, which would be around 0.0150, and that would be below the lows of December 2017. So Euro versus Ethereum versus the Bitcoin, looking for the buys. Monero was a bullish plan for us the previous week, but this one already finished and paid. Let me just find that here. That was what we wanted to see previous week. We got the bullish divergence. We got the rally. Right now, I would still remain bullish with this invalidation and this possible bullish hidden divergence to form. As long as that's the case, we still have the idea of triple double with possible further continuation. So Monero is bullish as well with this invalidation plan. Previous week rally paid. So that's all for the coming week as for now. Any questions, guys? Thank you for your focus and attention. Roberto, thank you for the attention on the short view. It's very, very true. All right, so if there are no questions, I wish you a wonderful trading week, guys. I'm going to work on the report and I will share it with you later once it's ready. The video will be uploaded, of course. And thank you very much for being here. I wish you a wonderful trading week. I'll see you later in the Telegram groups. Bye for now. Thanks for being here.